Hello and thanks for tuning in to Kalkine TV. I'm James Preston and this is the Stocks in Action show. In this edition we'll take a look at the likes of Newcrest Mining, Telstra and CSL, but let's begin with Westpac. Shares of Westpac, one of Australia's big four banks, were trading down on Tuesday. The company soared on the 12th of October 2021, or should I say shared on October 12, 2021, that its reported net profit and cash earnings in the second half of 2021 will be reduced by 1.3 billion Aussie dollars after tax due to notable items. The notable items after tax include a 965 million Aussie dollar write-down of assets in Westpac Institutional Bank following their annual impairment test and an additional provision for customer refunds, payments, associated costs and litigation provisions of 172 million Aussie dollars. The financial business giant is likely to announce its 2021 full-year results on Monday, the 1st of November. Previously, they announced the separation and transaction costs, along with a deferred tax asset write-off related to the agreed sale of Westpac Life Insurance Services of 267 million Aussie dollars. Along with other costs associated with the divestment of the group's specialist business of 24 million Aussie dollars. Let's move on now to mining giant Newcrest. Their shares were trading up on Tuesday after the company announced that its board has approved the progression of all the pre-feasibility studies across 4 possible new gold and copper projects, featuring an internal rate of return of 16% or higher. The new projects can help lift the copper production 37% in the long term. Newcrest also shared that there is a consistent strategic focus on maximising cash flow from long life, low cost, high margin assets. All 4 organic growth options are likely to deliver an internal rate of return of 16% or higher and a projected 50% reduction in group all-in sustaining cost per ounce over the next decade. Newcrest intends to fund all 4 projects through operating cash flow and existing liquidity. Let's move on now to pharma company CSL. Their shares were trading up on Tuesday as the company concluded its annual general meeting for the financial year of 2021. The company's management said that it even expects to post a profitable financial year for 2022. CSL expects the financial year of 2022 to have profit ranges between $2.15 billion US dollars and $2.25 billion US dollars. Expectations are also in for revenue growth on a constant currency basis between 2 to 5%. CSL's top management clarified that increased costs could hurt the gross margins for its core plasma collection business. It is now seeking growth and expansion across the business into the 2022 financial year. Moving on now to telecommunications giant Telstra Corporation. Shares of Telstra were trading up on Tuesday as the company shared details of the company's annual general meeting, wherein its guidance for the 2022 financial year and its underlying EBITDA has been quoted between 7 and 7.3 billion Aussie dollars compared to the 2021 financial year underlying EBITDA of 6.7 billion Aussie dollars. For underlying return on invested capital, Telstra desires to achieve around 8% by the 2023 financial year, with further accelerated growth into 2025. Time now for a very short break on the Stocks in Action show. After these messages, we'll take a look at Lepidico.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
What the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Thanks for tuning in to Kalkine TV for the Stocks in Action show. Let's now turn our attention to Aussie company Lepidico. Lepidico has secured land for its Phase 1 chemical plant within the Khalifa Industrial Zone in Abu Dhabi for an initial term of 25 years. The sustainable lithium hydroxide and critical metals developer obtained the land by executing the Musataha agreement with Abu Dhabi Ports Company PJSC. The plant will cover an area of around 57,000 square metres within the industrial free zone, allowing full foreign ownership as well as tax exemptions on imports and exports. Under the deal, off-site infrastructure will be delivered by Kizad's parent company, Abu Dhabi Ports, to the boundary site. The infrastructure will include natural gas, power, industrial water, sewerage services, access to roads and also drainage. The Pidico's shares are up by 6.52% at 2.5 cents apiece in the morning. Up next is mining and exploration outfit 27Co. It's set to kick off drilling next week at its wholly owned Rover Gold project in Western Australia. The company is planning to drill 31 reverse circulation holes as part of a 2,000 metre program focused on the Blue Hills, Four Corners, Harmonic and Creasy 1 prospects, which it considers highly prospective. In particular, drilling will test below and along the strike of Harmonic and Creasy 1 and will test recent gold in soil results where 1.15 grams of gold per tonne samples have already been recovered. The company is also planning iron oxide copper gold drilling within the Midas tenement in New South Wales. 27 shares are trading in the grey at 0.5 cents each throughout the morning session. Let's now shift to Australian neo-lender Wiser. Wiser has advised its second warehouse funding facility of $225 million is now operational. The fintech stock said its second vehicle finance went live on Monday, with its existing $127 million vehicle loan book to be transferred across as part of the deal. The company said the new facility would provide immediate management benefits on top of the additional capital which is now available to the business. The warehouse loan is backed by one of the country's big four banks and a mezzanine lender. Wiser decided to lock in the second warehouse following the success of its vehicle loan product in the 2021 fiscal year. Since launching, vehicle finance loans have grown to represent 20% of all of Wiser's originations as of the 30th of June 2021. Shares in Wiser were trading down by 1.09% in the morning session. And lastly, let's take a look at industrial engineering solutions company Worley. Shares of energy sector service company Worley were up on Friday as the company bagged a services contract for a residue upgrade project at Saudi Aramco's Ras Tanuru refinery. The project will convert low-value refinery residue into higher-value products like gasoline, jet fuel and ultra-low sulfur diesel. Worley will provide early front-end engineering design and project management services. It covers upgrades to the atmospheric and vacuum gas oil from the crude distillation unit and an upgrade to the atmospheric gas oil from the Cuff condensation unit. Alright, well that's all for now for the Stocks in Action show. Make sure to keep watching Kalkine TV for the latest trending market updates. I'm James Preston, signing off for now.